Good morning, everybody, and welcome to the Seiler Wealth Management video blog. I'm Lee Seiler, also known as the Stock Doctor. By the way, I did not give myself that name. All right, there's been some agreements and let's say disagreements within the office that people can choose their own nicknames. You cannot do that. Okay. Case in point, Seinfeld episode. George tried to call himself T-Bone. Okay, not possible. Monkey Boy fit much better for George Costanza. Anyway, so this is just an inside joke, but I thought you guys would be entertained slightly, very slightly, so far this morning. Because you know what? We had a pretty good day yesterday as the markets rallied over 7%. Now, let me just take a step back because last video blog, I did my short version on Tuesday mornings, and my long form version comes tomorrow at 7 o'clock. We did the last several weeks, and I really appreciate it. That's the Hump Day market update, and I really appreciate a lot of people joining. We had a lot of questions. By the way, the ticker on the bottom, you can email your questions for either today or tomorrow night to Nikki at stockdr.com, or you can call the office. And we had several calls actually with some great questions, and I'm going to address one of them as soon as we're done here. But okay, so last week was not a great week in the market. Our biggest fears really came to fruition, and we knew that the jobs reports were not going to be good. We knew that the week before unemployment was 3.1 million new unemployment applications, and then we weren't sure what the numbers were going to be this week. But guess what? Or when I say this week, last Thursday, over 6 million more filed for unemployment. That's not really a surprise, although the number's surprising. But you got to think about how many people out of work. Just think about your sphere and say, okay, I got this buddy, she's out of work, this, something's going on there, they're furloughed. I mean, there's a lot of people, and it really sucks. And I'm sure that the assistance that you get from the government via whatever unemployment stimulus check is not going to make a dent into what you're losing out. I'm sorry. I mean, that's just the way it is. The government can't cover your whole salary, which is unfortunate. I wish they could, but they're going to do the best they can to try and make life a little bit better. And again, just talk to your mortgage companies, finance companies, credit card companies, and they'll work with you. So let's take a step back. Last week we had the bad jobs report, and then on Friday was the monthly jobs report, which is the big number. And the week or the month previous, we gained 270,000 jobs, and then this month we lost 100,000 jobs. Now, that doesn't sound like a lot. It was a big decline, okay? I'm sorry, the estimate was to lose 100,000 jobs. We lost 700,000. That's a big number. But next month, it always reports the first Friday of the month. So the first Friday in May, we're going to have a just disastrous jobs report for April. But the market last week was down, expected. And I got to tell you, come Thursday, it seems I'm telling people all the time, well, you don't have to buy anything today because tomorrow the market's going to be down. Every Friday, the market's going down. And why is that? Because now we're pretty much program trading. And the programs don't want to hold long positions over the weekends. You don't know how bad the news can be. So why be a long position when you could sell off on Monday morning? So we sold off on Friday, down 300 and change on the Dow. Yesterday had us over 7, almost an 8% rally. And let me just take a look at the numbers here. Bear with me. I'll get the numbers out for you. I mean, the Dow was up 7.75%. Now, we just opened the market right now. I'm just going to show you these numbers. Okay. It's 9:30. Wow, 9:32. The Dow's now up 856 points. The NASDAQ up, S&P, everything is up big. So we're having another big day here. But let me show you, last week, let's go to the Dow chart. I talked to you last week about the W base. When you see the markets form that W base, you can have W can stand for win. And if you recall, I'll show you here. The steep decline, I showed you that with the rally. And I said that was probably a sucker's rally, and we pulled back. Now, I suspected, and if you recall last week, I said the market from this upward move, from the low here, March 23rd, to the high it hit a week ago, the market could give back a third to 2/3 of that move. I said, okay, likelihood is it'll give back half. Gave back about a third of that move before rallying forward. Now we're up again. Again, this is all part of the process. The market, as I said last week, has very likely hit a low. We've probably seen the low for this cycle. But again, there's a big difference between a low and a bottom. This is a process. It takes time. And I told you the W base is the most likely formation that you'll see when the market is coming out of the bear. So the good news is there's been some opportunity. The bad news is if you haven't had the dry powder to take advantage of it, it's a problem. So what do you do now? Then you hold tight. All right. I believe that this soon will pass. And I believe the market will bottom when we see the number of cases peak. So I think that will coincide when there is the maximum pessimism that this is never going to end. That's when the market, and it may have already done that, but again, I believe the market's already hit the low March 23rd, but it hasn't bottomed. And I just want to just really instill that in your brains. There's a big difference between a low and a bottom. A bottom is a formation. It takes time to form. A low can be achieved in one day. So I think the low's been had. We're forming a bottom now. I don't think though. I think we'll try and retest it again. It may be more of a W, spread out W base, but I think that's going to happen. So unemployment was at 3.5%. Now we're at 4.4% on the way up. 3-4 weeks ago, I did advise you that we're in a recession when we went up 0.4% in unemployment. So we were 3.5%. I said, hey, at 3.9, any tick above that, it's a recession. March 15th, the recession started. I mentioned that. It's on film. Rewind the tape. And I believe it did. And we are in a recession now. And there are some people saying that it could be depression. And I'm in the camp that I hope not. I hope they're not soup lines and bread lines. But I'm not so sure that there's not. I'm not saying there's a depression. Please don't take that. I try to be an optimist, and I try to give you. And I've been told that I'm soothing, and I can just give you hey, not feel so bad about things. And I tell people all the time, don't look at your statements. If you can't stand the heat, get out of the kitchen. Don't look at your statements if you don't want to see it down 20% or more, or 30, or 35, or 40. Do not. So anyway, tomorrow night I'm having my event. It's my long form. It's the Hump Day Market Update. That's Wednesday at 7 p.m. I encourage you guys to join. Get your questions ready for me. We're going to talk about my Baker's Dozen Plus, which has been doing extremely well. One of the surprising ones on my Baker's Dozen Plus I really like is DR Horton. It's not a recommendation, by the way. Do not buy anything without talking to somebody consulting, or you can talk to us. DR Horton was on my list of 14 stocks, and I had it on my list at 30, and it's done extremely well. And the ticker symbol on DR Horton is DHI. That makes a lot of sense, right? And why isn't the chart pulling up? Here we go. The chart is pulled up on DR Horton. So if you look at DR Horton, it looks very much like the Dow Jones. If you can see it, it tanked the rally, and there's a W. Now, remember I said that oftentimes the W base, and I think the more accurate and the more powerful W base is when the second or the right side of the W supersedes and cuts below the first side. But that was really a climactic sell-off on March 23rd. So, again, I'm not sure it's going to happen. But this is the bottoming process, okay? This is a bottoming process. That right there is a low. So let me restore that. When you look at the Dow, and I'm going to use the Dow because I know you folks like to see the big numbers. Okay. The Dow up there was at 29,000 and change. Up here, 29,000 and change, okay? The Dow down here was 18,002. That's 11,000 points. It rallies up to here. That day, the market hit a high, 22,595. Then it sold off last week and hit a low of 20,735, and now rallying back up. This is the bottoming process. It takes time, weeks, months. This is the low. Anyway, folks, I am Lee Seiler, and I really appreciate you guys joining me. Join me tomorrow at 7, okay? At 7 p.m. on this bat time, this bat station, and let's hope nobody is bat you-know-what crazy. Anyway, everybody have a fantastic day. I'll see you next time.